Carbine Resources has announced a significant resource upgrade at their Mount Morgan gold-copper tailings retreatment project in Queensland. This has seen the resource grow by around 20%, or 1.8 million tonnes, to just under 400,000 ounces of contained gold. The resource upgrade was a key requirement for the completion of the DFS, which is due to be released during September 2016. And whilst the resource has grown in all areas, we were particularly encouraged by the confirmation and increasing grade at the Red Oxide and Mundick Gully tailings dumps. The grade at Mundick Gully was particularly important as we believe this area will be mined first. And given the grade, we have estimated that the average production over the first 2 years should be around 50,000 ounces of gold production per annum. Carbine also recently announced our $7 million capital raising, which was heavily oversubscribed. This raising was important as it not only ensured the company has sufficient funds to complete the DFS, but more importantly, introduced a number of strategic funds and investors to the company share register prior to the larger capital development raising in the near future. And due to the resource upgrade and the capital raising, we have reviewed a number of our key assumptions, which has resulted in our valuation for Carbine increasing to 50 cents per share. The key assumptions in our valuation that we explain in further detail include our mine life, operating and capital costs, as well as our commodity price assumptions. The major difference in our current valuation compared to our previous assumptions is that we have slightly adjusted the head grade in line with the revised resource, whilst also extending the mine life to 10 years. We believe this is relatively conservative, given nearly all of the current resource is in the indicator category and is likely to be converted into mineable resource when the DFS is released. We have also not taken into account any of the exploration potential that remains at the project, as Carbine has estimated an upside exploration target of around 40 million tonnes at 1 gram per tonne, which equates to more than 1.2 million ounces of contained gold. And given this exploration target, as well as the significant change in the market's appetite for gold equities since the company completed the PFS, we have examined a number of extended mine life scenarios, as well as examined our scenario that increases the throughput to 1.5 million tonnes per annum. And as shown in the graph, under each of these scenarios, there is further upside compared to our base case, particularly under the increased throughput scenario. We have kept our operating costs in line with our previous guidance, as we maintain our belief that given the significant byproduct credit revenues, Mount Morgan will be one of the lowest cost gold producers in Australia. However, we have slightly increased our total initial capital costs, as we no longer assume that the Kundana plant, which Carbine owns, will be utilised in the initial build. But as there is a degree of uncertainty regarding a number of our key assumptions, which will be confirmed in the upcoming DFS, we have examined a range of upside and downside scenarios. In all scenarios, including the triple downside, our valuation is still higher than Carbine's current share price, which highlights both the robustness of the project, as well as the long-term upside potential in Carbine's current share price. And finally, the Australian dollar gold price has been one of the best performing sectors during 2016, as the price has strengthened from less than $1,500 per ounce to recently reaching a high of more than $1,800 per ounce. Our base case assumed a flat gold price of $1,750 per ounce over the life of our valuation. But given that commodity prices can fluctuate, we have examined a range of higher and lower gold prices to determine the effect on our valuation. And we note that for every $100 per ounce change in the gold price, our valuation changes by approximately 4 cents per share. Further details regarding our financial assumptions can be found at the Sophisticated Investor website by clicking on the link.